Hi, this is Elliot Eisenberg of Graphs and Laughs, catching you up to date on the latest in residential sales data for Hillsborough and Pasco counties. And as has been the case for endless months now, there's simply no inventory out there, no matter how you measure it. If you measure it at days of inventory or months of inventory or median time to contract or whatever you look at, it's way down. Now, it's up from a few months ago, and that's good news, clearly. But even if you compare it to a year ago when the market was hot and there wasn't much inventory, it's well down. The concern that I have here is that spring season is still a few months away, albeit, but if we don't begin to see a lot more inventory coming up, it's going to be a very tight spring with very limited inventory out there. Inventory continues to be the major story here, and there doesn't appear to be much relief in sight. If we move away from inventory and look at pending sales are essentially flat in both Hillsborough and Pasco counties. Now that may not sound great, but remember, a year ago, sales activity was spectacular in October-November season with COVID on us and no injections around. So these are very high numbers. They're just not better than they were a year ago. If we look at actual sales activity, it's down ever so slightly. But that's still good compared to, remember, the rocket strong last year. And keep in mind, inventory is well down and prices are well up on top of that. If you look at sales price to original listing price, it's 100% for both types of property in both Pasco and Hillsborough County. So realtors continue to do a good job of explaining the market situation and how strong it is to sellers, and how buyers really have to be prepared to pay full price to get a house, if not more than that. To wrap it up, in Hillsborough and Pasco counties, price appreciation is well over 20% in both counties for both types of properties. This is a strong market. It's just not stronger in terms of sales and pending sales than it was a year ago. But remember, prices are well up more than 20%. If we look nationally at what's going on, Q3 was a pretty crummy quarter, 2% GDP growth, that was about it. I expect Q4, which we're now in the middle of right now, to be much better, to be at least twice as good and probably end up at somewhere around 4, if we're lucky, 5%. That's good news. Now, if we look at vaccination rates, and this is important, they're now approaching 60%. And if we include Americans who've been sick, who haven't been vaccinated, and kids who will get vaccinated soon, we'll be looking at something like 71 or 72% of Americans who've been exposed one way or another by the end of the year. That's good news, because now we've just discovered there's now what's called the Omicron variant that's come from South Africa. It's a variant of concern by the World Health Organization. There are two things to keep in mind about this. If it's not a big deal, well, it doesn't really matter. Delta variant's still the key find. If it is a bad variant, it will be bad for the economy. We'll close back a little bit. We'll pull back. We'll wear more masks. We'll go outside less. But it'll be a boon for housing, because the people who didn't buy a house yet, who haven't been ready, who haven't been willing, who kept thinking COVID's going to go away, may well now throw in the towel and say, all right, let's go out and buy a house. So this could have both positive and negative ramifications, very positive ones for housing. The more negative they are for the economy, the more positive they are for housing, odd as that sounds. If you look at interest rates and inflation, yeah, inflation's gotten worse, there's no question. I think it peaks out somewhere over the next several months. And then the question becomes, what happens to long-term rates? And long-term rates really aren't going to go anywhere, because the Fed has told us they are more than ready and prepared to raise short-term interest rates, overnight money, 30-day money, year money, Fed funds rates, and so on, short-term interest rates. And their willingness to raise short-term rates as much as they'll have to starting next summer has put a lid on the rise in long-term rates, 10-year treasuries, 30-year mortgages, and so on. So I'm looking at 30-year mortgages and saying not much is really going to happen to them, even though interest rates are high, because the Fed's on the ball. That's it for now. See you next month.